Hello students. In our today's class we will study the merits and demerits of internal audit. So as we have studied earlier, internal auditor is the person who works internally in the company and he reports to the board of directors not only regarding the financial statements but also the rules, regulations, procedures, compliances, whether they are followed or not by the company. So we'll see the merits first. Staff remain alert. So whenever the internal auditor is there in the company, automatically the staff will remain alert. Okay, why? Because they know that their work will be checked and monitored by the internal auditor. They know that the internal auditor is going to check whether they have followed the rules and regulations, whether they have entered the transactions as per the accounting standards. Okay, whether as per the company law, whether they are following or no, whether they are following various acts or no. So he checks each and everything. That's why the staff will remain alert. Then the next one, detection of errors and frauds. So as we have studied earlier also, error is an unintentional mistake, whereas your fraud is the intentional mistake. So here whenever errors occurs in the organization, the internal auditor helps to find it out and rectify those particular errors. Okay, and in case if frauds have arisen at that time, he tries to find out the fraud which has incurred and tries to eliminate those frauds. Okay, he tries to find out the person who has made that particular fraud. Okay, and after that he gives the suggestions to improve them and take corrective actions. So what are the measures to be taken, that will be insisted by your internal auditor. Then detect misuse of resources. So it helps to detect the misuse of resources in time. Okay, so suppose if there is any misuse of the resources, if the staff are using something for their personal use or maybe something else, okay, or maybe some resources are not used properly or efficiently, at that time he will give his suggestions, okay, to the board of directors, which will help the management to reduce unnecessary expenses. Okay, say suppose there is overstaffing in the organization, or maybe there is non-use of some machinery, at that time he gives his valuable suggestions. Okay, so that there will be optimum utilization of resources and there will be lesser misuse of the resources. Then increase efficiency. So it checks the efficiency of the staff, which helps the staff to remain alert and be more efficient. So efficiency means what? Doing the task correctly with lesser time and with minimum cost. So whenever the staff are working in the organization, they will be given the standards. Okay, they will be given the targets to be achieved. So on the basis of that they are going to work. So whenever they know that there is someone to monitor over their task, when there is someone to monitor over on the work which they are performing, so what happens, they will remain alert and they will try to be more efficient to work. Okay, so thus it increases the efficiency of the staff. Then helps the final auditor. So as we in the previous class, in the introduction, I have told you there will be an external auditor who is going to come and audit the financial statements, and there is this internal auditor. Okay, as we know, internal auditor checks each and everything, not only financial statements, but he checks each and every department. Okay, say the laws, rules, regulations, procedures, operations, each and everything is going to check. Okay, so when this internal auditing is going to end, at that time your external or your statutory audit is going to begin. Okay, so this acts as a base for your final auditing, that is, it acts as a base for the final auditor. Okay, because the internal auditor first he will find out the errors, frauds, and make the corrections over there, and then the final auditor, that is the external auditor, will come and check the financial statements. Okay, thus it acts as a base for the final auditor to audit the statements. Then increases staff morale. Okay, so morale is nothing but enthusiasm. Those who are working, those employees who are working honestly, who are working correctly, at that time it increases their enthusiasm, because they know at the end their work will be recognized. Okay, so whatever the work they have performed, whatever the targets they have achieved, it will be recognized at the end. Okay, there will be evaluation of the process. Okay, so here it helps the staff to increase their morale. Okay, so honest employees can expect something at the end of the year, and evaluation is possible of any staff at any point of time. Okay, because the internal auditor will be knowing which task is done by whom and what work is being performed by which group or team. Okay, so it is really very easy to find out, it is really very easy to evaluate the performance of each and every staff. Then let's move on to the demerits or drawbacks or disadvantages of your internal audit. So return may not be accepted by shareholders or tax authority, okay, because they depend upon the report of the external auditor. So in a previous class also I have told you the internal auditor may be a professional, okay, so he may be a CA, CMA, or he may be any person who is been appointed by the board of directors and not the shareholders. Okay, that's why the shareholders and the tax authorities, they do not rely on the internal auditor's report. Okay, they totally rely on external auditor's report. Okay, then personal bias. Since it is done by the employee of the company, chances are there it may be biased and the company cannot depend on such report. Okay, since he will work in the company throughout the year, what happens over here is, here the employee, okay, here the auditor may be biased in his decision. Okay, he may join hands, there are chances that he may join hands with the management. Okay, so there are possibilities, so there might be personal bias, there might be favoritism or any such other kind. Okay, so in such kind of reports the company cannot rely, that is your shareholders cannot rely on the report of the internal auditor. Then detection of error may sometime fail. Okay, so as an internal audit is not done by professional auditor, again the same point is repeated over here, chances of internal auditor not detecting the errors are high. Okay, because here again the same thing, he is not a professional, he might be any ordinary person selected by the board of directors, so that particular person cannot easily detect frauds and errors very easily, so sometimes it may fail also. Okay, so frauds and errors may not be detected by the auditor, even if it is the combined, even with the combined efforts of management and employees. So with the help of management as well as employees also, sometimes he may fail to determine, he may fail to detect the errors. Then affects company's reputation. So whenever the internal auditor does not reveal the errors, okay, so suppose if he has hidden some things, if he has not disclosed the errors to the management nor to the outsiders, at that time it will affect the reputation of the company. Okay, so how does it affect? Suppose if there is a loss, or suppose if there is sales shown wrong in the books of accounts, okay, and the internal auditor knows that, but still he does not disclose it. Okay, if later on it is found out that that particular fraud whatever is made, okay, if it is revealed in the market, at that time the company's reputation will be definitely affected. Okay, then it is very expensive. So here internal auditor, as I have told you, he works in the company. Okay, he works in the separate department of the company. So since he acts as the employee of the company, he should be paid. Okay, so that's why it is expensive to the organization. Okay, and even the chance of errors because of poor knowledge of audit staff, it is also another disadvantage. Then the last one, not suitable for small firms. Okay, internal audit is not suitable for small business organizations, say your sole proprietorship and all. What is the use of internal audit to the sole proprietorship? No, it's not. Okay, it is only suitable for big firms. Okay, those firms or those companies, those businesses with less financial and operational activities, for them internal audit is not at all suitable. Okay, so that's it for the day. I hope these things are clear to you all. Okay, thank you, have a nice day.